My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome, everybody. Welcome, Cramer. People make friends. I'm just trying to make a little money, and we're going to do that. My job is not just to entertain them, to educate. It's going to teach you. Call me, 1-800-743-CBC. Tweet me at Jim Cramer. Be nice. When we value stocks in this environment, we tend to think of how they'll fare in a world of rising long-term interest rates. Oh, cheap out. Or how they'll perform under the new presidential regime. Trump. We care about the sector and how it's behaving. But how about the companies? How about the people who run them? We don't talk enough about the people who run the enterprise around here. And some, not all situations, but some, that is all that matters if you want to make huge amounts of money, which you do. The transcendence of the enterprise, thanks to the leadership of a great CEO. Why not celebrate it? Hey, stop denigrating it at least. So in a day where the average did well, the Dow gained 169 points, S&P climbed 0.53%, NASDAQ advanced 0.25%. You know what? It may pay to think bigger instead of just being in the tech battleground out here every day. Tonight, for example, Apple reported earnings. Now, we knew coming into the quarter that iPhone sales might be light and China sales might be sluggish. And that's exactly what happened. iPhone sales of around $69 billion were light versus expectations of more than $70 billion. China sales did decline 11% year over year and missed the consensus expectation by more than $2 billion. There, I got it out. I got the bad news out, all right? You wanted it, I gave it to you. Of course, that ignores the fact that Mac and iPad both beat expectations handily. It ignores the fact that the increasingly important services line grew 14%, beat expectations as well. It ignores strength in the Americas, in Europe, and the rest of Asia, maybe outside of China. It ignores all that's coming down the pike for Apple and AI. Later, healthcare, which CEO Tim Cook continues to believe will be huge for the company. Told me that tonight. And then on the call, the company actually gave better than feared outlook for the current quarter. Though, guess what? There'll be growth, low single digits. You know what? And then the stock had to flip positive because there's so many people betting against Apple. Go figure. But you know what? As much, look, Apple don't trade it, right? But I have to tell you, I do want more out of my stocks than just better than feared. I am tired of tech just sitting there and people arguing about it all the time. It's getting boring to me. And that's why I want to go far afield tonight and suggest that we look for the companies with the best new coaches, because we know a great new coach with a fresh look can easily turn around a company, and I want to know them. For instance, I want to start with someone we had on the show last night that's making more money for you than any company I'm talking about. I'm talking about Kevin Hochman. He's the CEO of Brinker. Hey, just because it's small doesn't mean you can make money. There's no rule. You may know him as the parent of Chili's. You probably eat one unless you're like really rich and you're like one of those oligarchs that Biden was talking about. It's a chain of 1,200 casual dining restaurants in the U.S. Try it. They got good rings. A few years ago, Hochman departed a high-level job at Yum Brands, where he ran KFC, in order to take the helm of Brinker. Norm Brinker was the guy who ran it. That's where they got that name. I followed the company from when Norm Brinker was alive. My kids like Chili's. I always liked the price point, the convivial crowd, and, of course, the baby back ribs. But I never liked the stock. Nothing special, marginal, meaningless. And then less than 3 years ago, Hochman came roaring in as CEO, and it's never been the same. He simplified the menu. That's too hard. That's what they have to do with Starbucks, too. He gave you a value meal dinner, under $11, an inexpensive, terrific mixed drink with real good tequila, special management, and and a delicious dinner for everybody. I saw it on TikTok. The result, the stock's now up more than 340% in just the past year. Yeah, you're fighting to get Microsoft and get that 1%. How about that? How about the 300 plus? If Brinker goes to 200, and hey, it's already 182, do you know that it's a 10-bagger? The legendary Peter Lynch, the former manager of the Magellan Fund and the author of One Up on Wall Street, the best business book ever written, talks about how the goal of every investor is to hit a 10-bagger. I think Hochman's going to give you a 10-bagger. I wish tech could still give you one. Second, there's where I had my cup of coffee this morning, Starbucks. When this stock was beaten down to $77, the company announced that the old CEO was out, and Brian Niccol, the incredible and creative executive who turned around Chipotle during its dark days, would now be taken over. Immediately, the stock took off. I kept thinking Starbucks would go down at some point. When Travel Trust owns it, wanted to buy more, but it never did. That initial run in the high 90s never looked back. In fact, when the company reported this week, the stock powered ever higher, to the point where this very big Dow company is now up over 40% since the last CEO got fired. Why? Didn't the media focus on how Starbucks missed its numbers? That's what I heard. Yeah, I call that headline-itis, the inability to capture the story in 12 words or less. Here's the answer. First, Starbucks the coffee might be good, but Starbucks the company was really poorly run. And Starbucks the stores? Disastrous. I mean, that's precisely the kind of job Brian knows how to do. It's what he did at Chipotle. In fact, it's almost as if he were born for this job. You know what it reminds me of? And I hate that this pains me because it's another team. The Washington Commanders. The Commanders, yeah, when the fabulous Josh Harris bought the club from billionaire buffoon Dan Snyder. In their first year, they get in the NFC Championship. It was manifest destiny for both. I have to tell you that. After interviewing Brian the other day, he spent the last 3 months figuring out what's wrong with Starbucks. And he's already taken actions like putting names on the cups, bringing the condiments table back, offering porcelain cups to those who stay, and spare no detail, uncovering the cover on the darn outlets that represented the end of the third-place coffee house because you could have a cup of coffee now with a juiced PC. Symbolic? How about realistic? Next, how about Larry Culp at the old General Electric? This company really stunk up the joint for so long, you almost had to believe GE was merely a practical joke played on the market. Larry Culp didn't think it was all that funny, though. He raised some cash by selling some good stuff because he knew every turnaround has to start with a balance sheet. Without a good balance sheet, the turn would be stillborn. Then he split the company into 3 separate businesses, GE Healthcare, GE Vernova, and GE Aerospace. Now, I remember going out to lunch with Larry and saying to him that this power business was bleeding so much money, the spinoff had to be a disaster. He challenged me. He said, look, the division's languishing, sure, but he told me not to worry. He worked to get the company an investment-grade rating, and then everyone would want a piece of it. I almost spit-took my Diet Coke. I don't know how far Larry can see around the corner, but now GE Vernova is a beloved company, the hottest one, with momentum traders can't get enough of it, precisely because it makes the turbines and wind mines. They call them turbines. I used to call them turbines. And windmills that you need to power all those new data centers. He appointed Scott Strazik to run what became GE Vernova. The stock started trading independently at 141 about 10 months ago. Now it's at 383. Oh, and don't forget, it's also going to be the company that builds small modular nuclear plants that everybody loves so much. I'll give you another one. It's kind of funny. This one is Nikesh Arora. When he took over at Palo Alto Networks, PANW, a once powerful cybersecurity company that had fallen behind the others, people thought turning his business around was too big a task. At best, he'd just be a deal maker and a so-so one at that. I knew Nikesh is brilliant, competitive guy whom I wanted to bank with, which is why we bought the heck out of the stock when he got put in. That's the charitable trust being the way. Now, Palo Alto had a $19 billion market capitalization when Nikesh took over on June 6, 2018. It's now worth $123 billion. He created $104 billion in value. Hey, one more. How about this one? Bracken Darrell. He left Logitech for the challenge of turning around the broken clothing company, VF Corp, a little over a year and a half ago. Stock was trading around 19 bucks. Heinous balance sheet. In July of last year, he sold off VF Corp's hottest brands to EssilorLuxottica for $1.5 billion in cash. It was good. It was good brand, but he had to do it. But Darrell, he needed cash. Sure enough, the company reported a great quarter last night. The stock shot up to almost 27 bucks. Finally, let's give IBM Christian his due. When he took over at IBM, he didn't know what it was at anymore. Who knew what it was more anymore? And the stock traded around 110. Christian took it from a hardware outfit with a consulting arm, spun off the legacy businesses Kindle, and Kindle's doing well too, by the way, and guns the stock to 258 as of today. Now, it's almost 50% software, gusher of cash flow. Darn thing shot up 13% in response to a great quarter. What a winner. Best of all, I think that gain is sustainable. So here's the bottom line. Not all publicly traded companies are hostages to forces beyond the control, like a Chinese outfit we never heard of that has just made it so that all we talk about is, I wish, you know what we get? I have it on the app. It's called SeatGeek. That's what I'm calling it from now. I got really good Super Bowl doing SeatGeek. Isn't that what we're talking? The Chinese AI company? All right, enough already, right? With the SeatGeek, sometimes when you bring in a great new CEO, they're offering me stocks in the 40. He's got a seat's on the 40 right here with the SeatGeek. They can turn around the whole business, giving the investors spectacular gains. Even when tech blinds us like mustard gas. I'm telling you, on Mad Money, we're never going to stop searching for opportunities to make you money, not just to argue about stocks. I want to start with someone like Kyle in New Jersey. Kyle.
Mr. Jim Cramer, how are you, buddy?
I'm good. I'm worried about the SeatGeek coming through in time for the Super Bowl. Oh, no, I'm sorry, DeepSeek. DeepSeek. What's going on?
Listen, congrats on your Eagles making it to the Super Bowl, man.
Well,
I know you're a
thank you.
huge fan. You stuck with them through thick and thin.
And if Brandon Graham suits up, look out. I wish the Reeds today best of luck because they are really some great people. And I kid you not, they are fabulous. All right, maybe we should talk. I don't know. Should we do some stocks? I prefer sports, but I got this contract.
I know, man. Well, listen, I have a passion for football and a passion for stocks, just like you, buddy. And,
I like that. Take the over on some stocks.
Listen, I want to wish my friend Jess a happy 30th birthday today.
Oh, of course, Jeff, man, happy B-Day.
So, and she's got an app in at UPenn, so I want you to talk to Jeremy Siegel to see if you can get her in for me.
Done.
Listen.
Done. Let me make that. Can I wait till the commercial, or I have to call him now?
Yeah, absolutely.
Okay. All right, now we got to know the stock. Let's even do better. Let's go to the stock.
I thought with Trump coming in, this thing would be on fire. Tariffs were announced today, buddy. What am I doing with my Cleveland Cliffs?
Man, you want to take the over on Cliffs anytime touchdown, okay? Do that. I would do it, and I think let me see. I think it's 35-1. Look, I think Cleveland Cliffs is so cheap now when you get the tariffs. The only reason they've really been crushed is because all that Chinese dumping. And that's going to end with the tariffs because that's what they're going to really police. I like Cliffs. Of course, I think Nucor is a better stock. And who am I? Dave's birthday? Who else do we have? You gave me a long list of people. And Jeff, happy birthday, Jeff. I'll have you over for a couple of brewskis later. Look, sometimes when a company brings in a new CEO, they can turn around the entire business and give investors some remarkable gains. Did I mention NVIDIA yet? I'll never stop searching for real opportunities to make you money. On Mad Money, talk about opportunities. Thermo Fisher is on the move higher after today's earnings beat. But can the stock keep running after its post-pandemic drought? Let's talk to the CEO. Then WM, the artist formerly known as Waste Management, kind of like RH, used to be Restoration Harbor, posted its fourth quarter results last night, closing up over 6% today. I'm checking in with the top brass to get a read on the macro environment. And later, I got an exclusive med tech player. Oh my, even those on Pickleball know this because you probably have your knees and they say striker. But don't open them up to see the name. Just trust me. And that's propelling the outperformance of the stock. We're going to speak to the CEO. So I got an idea. Dave, stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.